Hey, hi everyone, and welcome to today's webinar. We'll just wait a couple of minutes for everyone to sign in and then we'll make a start.
I have to say, Jim, that from my perspective, my air conditioner is not working today, so I'm just down to a fan. So it's gonna get a bit hot in here.
Just the excitement of talking about AML, isn't it?
It is indeed. Gets the blood boiling.
That's it. We'll make a start through. Okay, hi everyone, and welcome to today's webinar. So this is our second webinar in our four-part series. So this one today, I guess, is kind of a joint presentation there between BGL and Smart AML. So today I'm joined by David Murray and Peter Mills there from Smart AML. Welcome, guys.
Thanks for having us. Very happy to be here today, and hopefully we can help everybody on the seminar today.
Thanks,
Sounds good.
Stephen.
Maybe
Really excited. Really excited.
sounds good. Maybe from one of you, maybe who is Smart AML?
Well, Smart AML is a consultancy. We do just purely AML, and particularly given the current state of things, AML implementation at this time. And it's just a partnership between myself and Peter, and we have subcontractors that do work for us.
Okay, very good. And I suppose we'll get that in just a second. But so for today's session, I think I just saw a question pop up with that. Today's session is being recorded. So if you do miss any parts of it or would like to send it to a colleague, you will be sent a link to the recording. If you missed the first webinar, if you go to YouTube and search for BGL, you'll find it there on BGL's YouTube channel, and you can watch the recording, which really went into a lot of details about introducing the legislation there. Today's slides will be sent to all attendees, so that'll be sent in line with the links. And you do have the Q&A panel, which you can ask any questions. So at the end of today's webinar, we'll go through and answer as many questions as we can. And any that we can't answer, we'll take offline and get back to you. So as I mentioned, it's a four-part series. We've completed first one, which was really introducing the AML and CTF requirements. So David and Peter are going to take us through, I guess, more around the detail. So, I probably gave the introduction. These guys are the experts. They're going to go through and probably give you a few more there, talk about actual cases, talk about what's actually what's happening in there. I suppose how does it work in reality going through. Our third webinar there in the series is hosted by Daniel, our CEO, that's got two accounting firms coming in and talking about their plans and how they want to implement what they're thinking about in terms of onboarding, what needs to change in terms of their client and customer flows and things like that. And then the last webinar in the series will be introducing our new AML product there, which I'll cover a little bit of in towards the end. So I'll pass over to, I guess, David and Peter. I think, David, you said you're going to do the majority of the talking there, but I guess maybe before we get even, maybe David and Peter, do you want to give maybe a 30-second bio of yourselves as well?
Yeah, sure. I'll go first. So my name's David Murray. I returned to Australia from Hong Kong last year. I lived there for 12 years. The relevance of that is that in 2016, this branch two in a different way was introduced in Hong Kong, and I was part of the committee and I'm a lawyer. I'm the only lawyer on the committee who drafted the HKICPA AML regulations, which applies for the accounting profession in Hong Kong. I got deeply involved at that time in AML. At that time, I was a general counsel for KPMG in China. And then a few years later, after doing implementation in Hong Kong, due for various reasons I wanted to change, I went into doing consulting where I just became a financial crime and risk consulting partner in KPMG in China, mainly working with banks, but generally in financial services. So I've got a fairly long background in AML, CTF, 25 years as a lawyer. It's a background to that as well. I'll hand over to Peter now.
Thanks, Dave. Thanks, Jim. So, look, Dave's really done the heavy lifting, as you can tell from his experience. He's done everything, I think, with regard to AML and everywhere.
I wouldn't go that.
No, I would. So my history's not as salubrious, but what most of my career has been about is with regard to compliance and corruption, the two C's. So spent 5 years over in PNG basically only doing corruption, and you'll see that in the seminar, what that comes out of. And then compliance, and this might come as a surprise, the front end of finance, which is really what you guys are as accountants. You're your banker for your clients, if you can say that. So you're providing fees and services on credit and doing that front end compliance with regard to both onboarding issues, verification of identity for various purposes, including things such as the PPS Act or Personal Property Securities, and then advising small to medium businesses about their compliance obligations and what would happen if they didn't do that. So it's really important to see us more as an education process for David and I, because what we're hoping to help everyone with is this, I think, very tight market for compliance officers. And so our services will be focusing on providing what we call fractional compliance officer services, which comes out more in the presentation to help you guys over the next 12 to 18 months so that you don't feel like you're in this journey or trip alone. And it's, as I said, a transfer of knowledge we're hoping to achieve, thankfully, through people like Jeevan. This will make it much easier for you all to do your compliance. Thanks, Jeevan.
Sure, I'll hand over to you guys.
Okay. All right. Well, we'll kick it off. You don't mind, Jeevan, go to the first slide. This is the contents of what we're going to talk about today. There's a fair bit to get through, and some of it, given the amount we need to get through, we are going to go through quickly, but other parts of it we're going to talk about a bit more extensively. We will be focusing on what you need to do in the next 3 months. There's a deadline of 1 July, and we're going to spell out for you exactly what that means for you. So if we go into the first slide, just a summary of the current status. And just as a bit of background to everybody too, is that the only countries in the developed world that haven't done this tranche 2 AML implementation is Australia and the United States of America. We're in the salubrious company of countries like Chad, the Democratic Republic of Congo, and etc. I'm sure they're all nice places, but it's not great that we haven't done this as a country up until this point. As I said, I did this in Hong Kong, and that was 10 years ago, and that system's been in operation for a long time. The purpose of me saying that is that you don't need to panic. This has been done before. It's, of course, in Australia, it's a bit nuanced. It's got its own particular issues in the way that Austrac's dealing with this. But in a general sense, a lot of this stuff, it can be worked through. We can work it out. It's all in most ways been done before. I'll go into some specifics shortly. So just quickly recapping, Tranche 2 is what is called designated services. It's really accountants, lawyers, buyers and sellers of precious metals, conveyancers, trusts, and company service providers. Virtual assets, we'll come to that later. This is purely a risk-based approach. So as much as there are a lot of regulations and a lot of material out there, it is a risk-based approach. And you as accountants need to make an assessment of the risk for you and your risk appetite on top of that. It's about beneficial ownership, reporting groups. We won't go into today about tipping off and compliance. That's a particular issue, and I think it can be saved for later on, given we need to get through the other matters today. But certainly maybe in the future we can come back to some of the more specific elements, particularly about tipping off. And there's been a recent pullback. So there's been a lot of lobbying. There was going to be a very extensive rollout mandated by the Australian government and AUSTRAC. It has been pulled back a little bit, which gives everybody a little bit of breathing room, but I wouldn't want to suggest that there's still not a lot to do in the meantime. It's just not as much would be the way I'd position that, okay? So if we go to the next slide, we wanted to start off with an example of a suspicious monetary transaction. And Peter came up with this excellent example. So I'll throw to Peter to run through this for you to kick this off.
Thanks, Dave. I wish I could say that I came up with it, but it's an actual event that occurred whilst I was doing anti-corruption. So as Dave kindly pointed out, the three major groups that are being dragged in by Tranche 2, real estate, lawyers, accountants. And this little set of facts had all three. So it was a non-government organisation building a office tower in Papua New Guinea. And the builder had not done their numbers correctly. It was a fixed price contract. And due to currency exchange rates, they were going to be about, I think it was about $10 million under underwater with regard to the completion. Now, what happened was that the NGO's chairperson, who was appointed by the Prime Minister, signed a document which was supposed to be a early completion bonus. Now, there was no early completion. The building was on time. It was just going to be more expensive. And we're talking about red flags in money laundering for your business. And to see these sorts of things should be a warning sign that maybe there's something which is suspicious, and you should consider whether there has to be a suspicious monetary transaction report lodged. This is just an example of how this one played out. What happened next was that when that agreement was made, the 10 million kina, which is about 8 million Australian at the time, was paid into the trust account of a law firm in Papua New Guinea, which the chairperson, who was appointed by the Prime Minister, happened to be the managing partner of. Then the 9 million of the 10 million was paid from that law firm to a real estate company, which the real estate company was beneficially owned by the Prime Minister. And the third element, the Prime Minister was an accountant as well as being a real estate agent and the Prime Minister. So you see how this use of real estate in laundering money, not necessarily for terrorism, that's only one factor of the act or one part of the act, but also for exact criminal purposes, okay? And then that 9 million that was paid to the Prime Minister's real estate office was then paid out to a law firm in Australia. Now, I'm giving this as an example because it happened so quickly and the law is about data collection. So there wasn't anything that, if say, for example, that same law firm, just using that example, was in Australia right now and that money had been transacted in that way, there would have been red flags everywhere, okay? There would have been, why is there a fixed price contract having an extra 10 million added to it? It's money coming from Papua New Guinea, which is a grey listed country. And so that's another red flag with regard to transactions. That we've got the money being transferred to an entity which is more than 25% owned by the Prime Minister, who is a PEP, what's called a politically exposed person. So we're just sharing with you, if there is no offence of actually doing the transaction, the offence is not collecting the data or not making the suspicious monetary transaction report, okay? So this is not about you being a money launderer, it's about you not collecting the data, because this information is what then would be used by prosecutors and the like to recover those funds or to prosecute people for corruption or for drug offences or for tax evasion. So I'm just making clear it's the collection of the data and in cases reporting. So I hope that gives you a good background as to what you're doing and why you're having to do it. Thanks, Dave.
Yeah, thanks, Pete. And thanks. That's a great example. I think that's a really good one to get people into the mindset. And your points are well made, that it's about the collection of information. That's what this is really all about at the end of the day. So look, this slide is the one that we kind of spend a time winnowing things down and putting it down to spell out to you all on the call exactly what you need to do before 1 July. And these are the points that you need to address before that time. So you need to enroll as an AML reporting entity. There are decisions to be made if you're a group as to whether you have a single reporting entity or you have business reporting entities. So I won't go into those details right now, but happy to discuss that at a later time. But you do need to just register with AUSTRAC as a reporting entity if you're not already a reporting entity, I should add, because some of you may have already been registered with AUSTRAC. So if you have, you don't necessarily need to do anything again unless you need to take into account further parts in your organisation given this change in the law. You need to have an AML program. So what that means is, at the end of the day, you may have a lot of issues to deal with. You may have, need to set up your infrastructure, your processes, but you at least need to have a outline, preferably on a piece of paper in case a regulator ask you, an AUSTRAC, for example, or maybe a professional organisation, to say, this is what we're doing, and we're working towards a better situation in terms of putting in place the full program, the full policy, and getting efficiencies, educating people. And as Peter said at the beginning, we're hoping to try and get you to the point of able to deal with it yourself. But at the initial stage, it's a very intensive process. But to minimize it, you need to at least have thought out, this is what we're going to do. You need to do a risk assessment. You need to know your client obligations. What is client due diligence? What's extensive client due diligence, sanctions, PEPs, and training. We'll go into that in further detail. You need to have a compliance officer. Again, that's something which we'll discuss in further detail near the end of this, but somebody needs to be appointed to be your compliance person. You need to be doing training your staff on AML and have internal processes to deal with it. And you need to be ready to engage with your clients on it, because there may be issues you now have to discuss that you haven't been discussing with a client before. And again, that's going to become evident for what we're going to talk about further today. The big question in red at the bottom, what you need to ask yourself is, where are you at with each of these things? Because that's what you've now got to assess. What do I need to do? Where am I at? And how do I get this all completed in a satisfactory way before 1 July? That's really what we're talking about today. Okay. So we'll move on to the next slide. And what I wanted to do was to set out to you, like, this is from AUSTRAC itself, as a matter of fact, the money laundering environment in Australia. 82 billion in 23-24. It's the total cost of estimated crime. I think that's probably an understatement, to be perfectly honest, even though that's a massive figure. But that's what they've said. 58 billion is the cost to the economy of organised crime, and 11 billion is from illicit drugs. 13 billion is estimated from financial crime, and 8 billion is from illicit commodities. So I also wanted to point out that there are other elements to this. I've had the pleasure of attending quite a few seminars with money laundering professionals in the last 6 weeks. And one of the ones I attended had a gentleman who represents the organisation for crimes against children. And he's also said that that's something that actually this has a direct impact on. And, I'm not going to go into detail about that because it's a pretty sensitive issue, and it's one that doesn't make you feel pleasant. But it's estimated that that's an industry worth in $350 million alone in Australia. And that it's estimated that somewhere between 1 in 10 people are involved in this, either by using online facilities, etc. So I make that point because I want to say that this does affect people. I know that this is a regulatory matter, and I know that it's a compliance burden, and nobody's particularly happy about that. But I like to give people perspective because, I saw this. I'll also just go off on a tangent quickly. I also saw this in Hong Kong, where working with a bank, we were able to track people who had been, to use the slang, shanghaied onto fishing boats in the South China Sea, and were effectively slaves and prisoners on fishing boats. And we were able, through money laundering, to track down the people who were profiting from that, the people who were being exploited, and break that chain of crime. So if you want to be a person who's contributing to the community, this is part of that. That's the way I would put it to you. So when you're getting annoyed about the compliance burden, there is a real element to what you're doing. You may not see it directly, to be honest, but it does make a difference. That's the only way I can put it to you. Okay, moving on. So where are you? You need to understand if you're providing a designated service. We'll spell that out in the next slide. But so it doesn't cover everything. It's very specific. Unfortunately, that's the complication in this. You need to consider what the designated service is and whether you're doing that. And you need to accommodate your compliance to deal with that issue. You need to understand what the obligations are under anti-money laundering, develop your program, and appoint a CO or a fractional CO, which we'll discuss. AUSTRAC does have some good tools and guidance on its website. So we're not saying that we are the font of all knowledge. They do have materials on their website that you can use. Unfortunately, for example, Peter and I spent a bit of time trying to see the tool about figuring out whether you are providing a designated service. It doesn't really accommodate accountants, to be frank with you. And that's unfortunate, but I'm just telling you the truth. I'm not making a criticism of AUSTRAC. They may not have thought about it, who knows, but it doesn't really accommodate you. But it does provide other good pieces of information. And, I'd encourage you, if you want to go and have at least some idea of what AUSTRAC's thinking and what it thinks, go and have a look at their website. They do have a section for accountants, and that can help you get your mind into the mindset required for this, okay? So if you go to the next slide, these are the designated services categories. So they are nuanced and specific, but in a general sense, we wanted to set it out. If you don't already know what a designated service is, this is the headlines for you to consider in terms of AML designated services. We're not looking today to go through this in detail because, to be frank, this is something you can work out up to 1 July, and you'll definitely have to work out by 1 July, but you have other things you need to do before then. So this can be worked through, but you have more urgent issues to deal, being the ones that I've shown in the previous slide there about what you need to do before 1 July. They are very important. This is part of the process you need to implement. You need to understand it, but it will take time to work through that. So if we go to the next slide, just to spell it out specifically, is, if you're creating a new entity, setting up or managing companies, and what you've got to look for is in some ways figure out is what's the purpose of this company, because that's what the AML is trying to achieve. Is somebody trying to conceal ownership, somebody trying to conceal assets. That's what the purpose of the law is. And then same with buying and selling assets. So again, just to digress, Brendan Thomas, the CEO of AUSTRAC, at 2 of the seminars that I've attended, spoke, and on both occasions he mentioned money from the combined scam, casinos, etc., on the border of Cambodia, that they've identified that up to 5% of Australian real estate contains money that's been funneled from those Cambodian factories. That is a serious red flag, and I'm telling you that outright because he's twice mentioned that. So it means there must be a significant amount of money. To be fair, the problem here is they layer it. So what they mean is that it's combined with other funds and then they put it in. That's what happens in money laundering. All you can do is just help identify what you see. It's up to AUSTRAC to then uncover the other elements to that. But this is, again, the purpose is to identify if there's any funds that don't make sense. Bookkeeping can be used to disguise a transaction or remove things from records. So you need to keep an eye on that. And then managing customer assets, moving cash, issuing or cashing checks, international transfers. These are all used to hide assets. So that's just to give you a bit of an outline. Again, we could go on for quite some time actually talking about this, but we might talk about it at the end if we've got time for questions to go into it, but I'll leave it at there for now. Not throwing you under the bus here, Pete, but Peter came up with the idea of just to say, look, if you're selling ice cream, you're not doing these designated services, okay?
I like ice cream, Dave. I think a lot about ice cream, okay?
Fair enough. Don't we all, actually? But yeah, I mean, being a bit lighthearted, but look, just wanted to spell it out that, you need to be realistic about what it is. Individual tax returns, that's not really a designated service. BAS returns, generally speaking, not, although it can depend on specifics, but probably not. And we Smart AML is doing an online assessment tool, which we will come back to later. But just to give you, if you're just selling ice cream, doing your clients doing that kind of small business, unless they're making extraordinary profits that can't be explained, then I don't think that this is be the remit of what you're supposed to be looking at. All right, I'll go on to the next slide, which is we want you to consider, again, this is that process in the next 3 months. How are you as an organization going to deal with your AML? So, and I know that we have various size of companies and entities on the phone. So let's just be clear, is you're going to have to figure out what suits you. Like whatever the guy down the road's doing, who has a bigger practice, that probably doesn't apply for you. Vice versa, by the way. If you're bigger and you shouldn't be doing what the smaller practice is doing, you need to figure out what operating model is going to work for you. So I'm sure you all know that it's centralized, decentralized. I mean, there are consultants that make a fortune out of doing this stuff, telling people that whether they should centralize or decentralize. But AML is very much this. It's a matter of figure out of how you want to deal with that as a company. And we will come back to this in terms of we believe there's a monetization that can come from this as well, but we'll come to that at the end. There's a hybrid model, and then there's the outsource model, which is part of what we as Smart AML will be providing as well. But again, we'll come to that a bit more through this seminar. All right, if we go into the next one, the next slide, it sets out that basically what the key AML obligations are. This is the one that has the most written material in it, actually, but we kind of felt that we had to spell it out a bit just to be clear, so that the headlines don't necessarily give you the detail you need. So already said, you need to register with AUSTRAC if you're providing designated services. And you need to enroll, and you can create an AUSTRAC account and do that yourself. You don't really need anybody external to assist you with that. AUSTRAC's website is pretty good for that, and but you need to consider, if you have a group, whether you're going to have one reporting entity or whether you're going to do it as a business reporting entity. There's two models there, but it's up to you. Personally, and from my experience, a centralized reporting model is the better one. But there are other reasons for why you might not want to do that. So it's up to you. But you do need to consider which model you're going to lose and which one you're going to register. Program, as we said, reporting entity, risk assessment, policies, and appoint a compliance officer. Feeding back to what I said earlier, this is one of the things that needs to be done before 1 July. Those first two elements must be done before 1 July. The other elements is what you need to establish in the background during that time and after 1 July, even if it's a transitory or temporary way to deal with these issues, that's fine, while you set up your structures to automate and move that through and get it moving and have it into an efficiency model. But these are going to have to be done, but the pressing ones are the first part there. That needs to be done rather urgently. Well, urgent's probably an overstatement, but quickly. And you'll need to, once 1 July comes, look to be able to address these issues. To be fair, AUSTRAC is indicating that after that 1 July period, it is not going to be coming around looking to, kick heads, frankly. It's going to give you some breathing space, but those points I made about what needs to be before 1 July, that has to be done. There's no gray area in that. They are suggesting there's a little bit of gray here because they're allowing you to get the time and space to set up your systems, set up your compliance, and work through in your business how to deal with that. Okay, so I'm not suggesting you shouldn't do it or anything like that, but I am saying it's being made clear by AUSTRAC they're going to give you a little bit of breathing space for a few months after 1 July to work this through in your systems. Okay. If we go on to the next slide, wanted to point out, we said earlier, is like we are not the font of all knowledge. Austrac does have program starter kits. We think that the risk assessment, we have a tool that is very relevant to accountants and can do that and provide you what you need. The one on Austrac is pretty general and pretty difficult, to be perfectly honest. But their starter kits are quite useful for other information for you to figure out what your risks are, that there's good information there for that, what your money laundering risks are, what your client risks are. Policy documents, there's two policies that need to be addressed before 1 July. One is the AML policy and the other is the privacy policy. We'll have a quick discussion at the end with Jeevan about this and how it relates to BGL, but this is two things you're going to have to address because, as I said, is like you need to be 1 July, like we have this all in place. Now, you may not have all your operations sorted out, but at least you have that sorted out. It places you in the position that if anybody asks questions, you've done what was required before 1 July. Process documents, there's a lot of documents and forms in your operations to operationalize this. Frankly, again, Austrac's tried very hard to address this, but they kind of deal a fair bit with here's generally what you need to do. But I can assure you that when you get into actually trying to do it, there are a lot of processes you need to figure out. And in your operations, that will be something you're going to have to work through, and it will take some time, I'm sorry to say. But again, I would not want to discourage anybody from looking at what Austrac has. I'm just flagging with you there's limitations to it, to be perfectly honest with you. Okay, so the next one we'll go on to, the next slide is about risk assessment.
David, I've got a question there because I've seen a lot of noise in the last week myself.
Right.
The last part there, the AML CTF plus privacy. Are you referring to privacy policies that the firm may have?
That's right.
Explain a bit more too about that.
Yeah. Oh, okay. So sorry. So the issue being is that uh, an old style privacy policy will suggest that there are bits of information and client information that you can't share, can't disclose, etc. Due to the requirements under AML, you need to change that to allow you so that you're not in breach of policy in terms of dealing with AML issues. That's exactly what needs to be addressed. So it has to be reviewed in the sense of, okay, there may be a very, cut and dried, you can't do this, you can't do that. Because of AML, you'll need to address that and rephrase it to give you the flexibility to be able to do reporting, sharing information internally, even sharing with an external advisor if you think you've got a problem. These issues will arise, but if you fix it up in the policy, nobody's going to criticize you later for breaching your own policy of privacy. And I've got to be honest and say that will become an issue. People will later on sort of come at you like you breached my privacy, blah, blah, blah. Doesn't matter the fact that they're a criminal or whatever, it won't matter. They will push you on this. So it has to be addressed. So I hope that kind of spills a bit out for you, Chief.
I think, and also, Chief, I think,
Dave
and I were also talking about there's really, I think, those three key documents, internal documents. You've got your privacy policy, you've got your retainer or contract with your client, what it says as well about the information, etc. We'll have to make reference to AML. And the third thing possibly that Dave's going to touch on, also your employment contracts with your own employees with regard to their processes and vetting of them for AML purposes.
Quite right. Yeah, thanks, Pete. Quite right.
And I think that's very valuable because it hasn't been those three things haven't been talked about a lot, I would say. No.
Yeah.
Well, actually, I agree with you, Jim. And as I said, I've been attending a lot of seminars and been going to the AML professional seminars. And I think I've only heard it mentioned once or twice, and I've been to quite a few, actually. So I'm a bit surprised that people haven't necessarily picked up on it, but it's definitely an issue. And Peter's point, by the way, is that's the one that I haven't heard mentioned at all, to be honest, on your engagement terms. That's pretty critical to make sure that you've covered off your issues under that. It doesn't take a lot to fix it, to be frank, but it does need to be addressed. Yeah. Okay. So look, this is what an AML risk assessment covers. It's the nature of your services, who are your customers, your channels of customers, and your jurisdictions. So nature of services, designated services, any nuances to what you're doing in terms of company registrations, trusts, etc. You need to figure out what the nature of those services are, whether you're just how can I put it, a provider of documentation, or whether you're assisting in the transactions underlying those. That's a distinction that's made. You're looking at nature of services, just as an example. Who are your customers? So yeah, how much do you know about your customers? That's one of the fundamental questions in this process is, do you know who your customers are? Where do they come from? Which feeds into the third one, which is probably, to be honest, I can say this as a returned Australian recently, channels of customers. And what I mean here is, it's fascinating the amount of people who have only met their client over a video call. Some have only met them over a phone call even. And in the post-COVID world, I'm not saying that's unusual, but it seems to happen a lot more in Australia than I saw in other jurisdictions, to be frank. So that's a really important question, because if you've never actually met the customer, and that goes to also the personal identification factor when you're doing client due diligence, that's one you need to think about. What are your channels, where they come from, which ties in directly as to who they are as well. So that's one of the elements of it. Jurisdictions, well, as I said, I've named one that's a well-known one. So coming from Cambodia, you should be pretty concerned, on Myanmar. But look, there's other elements to consider that. So, for example, I worked in Hong Kong, and it's a respected jurisdiction, but there was also clients within Hong Kong that were recognized as not quite kosher. And, jurisdiction alone won't necessarily be a guidance for you. But look, the risk assessment is where you need an independent person to do a report, work with you on your risk assessment. We're just going to put online an online risk assessment for you to do this kind of thing. This is where one of the things that our services will cover to try and make it a bit easier to get this covered off in your compliance journey on AML is to do your risk assessment, do a form, get a report, and then and you can then work on your AML program once you've look at what your risks are. It's a fundamental step in the process. Just going to the next slide to be a bit more specific about it is you need to think about, is somebody, clearly looking to do tax evasion or to do, it's not, what do you call it? Not necessarily tax avoidance. I was involved a long time ago with a well-known person about a tax evasion case. There's a big difference between avoidance and evasion. But if they're clearly doing tax evasion, that's an issue you need to consider. Pete, I'd throw you on without notice, but the labour hire company, I think you had a recent example of one of these, or I might just quickly throw you to.
I was actually, it was probably a bit closer to home for all the accountants. They'll know about the former deputy commissioner whose son was caught up in, I think it was Operation, I can't remember, it was Python or something, where they had, no employees, and they were issuing these huge invoices for supposed labour hire. So those sorts of things were all about tax evasion. So it's not all, as we say, terrorist. It could be any sort of crime, or including tax evasion, that accountants need to be wary of.
Yeah, thanks, Pete. So and then you need to consider which, and this is the thing is I don't want to be at all sound condescending from an AML person's perspective. Is like these are kind of the obvious ones, but I'm trying to educate you to understand what the things that you should clearly consider. High risk jurisdiction, a politically exposed person. This is a tricky one. And frankly, I rely upon specialist reporters if I want to look at this in detail, because it's a complex issue to say the least, but it is something you need to be aware of and you need to ask questions about. Lack of any apparent economic or legal purpose. So yeah, what's the purpose behind what they're doing? Why are they establishing this company? Why are they looking to use it for this particular purpose? What's the outcome? Who's involved? So, unusually complex, large transactions. Yeah, I mean, that's kind of self-evident. That's something that you should be seeing. You should go, they're doing something which you've never seen before. You should be, getting alarms in your head. It's like, I need to find out more about what's going on here. Unusual patterns and sanctions persons. That's incredibly complicated now. Again, I would say that kind of something is, if you have a trigger for that, you have to rely upon specialists to give you that information, because from somebody who's done it once years ago, when you wade through the internet trying to work through that, it's incredibly time consuming and pretty complicated. So yeah, I'm not sure anybody really has the time to dig down the rabbit hole of sanctioned persons, to be honest, but it is something you have to be aware of. And the interesting one is, even Austrac raised this as adverse social media. And they say, just go and do a search on the internet to find your clients. I mean, I would say that, again, I experienced this in the past, that people can actually, you can use an algorithm, and there's actually particularly contractors and professionals out there who can specialize in pushing the pages down another couple of pages. There's actually algorithms that can do that. But so you can't just take the first page as the one that gives you all the social media and the media that's relevant to the person or organization. You kind of have to scroll through it and have a look. It will pop up. It's just that if they've got particularly bad social media, there are organizations out there that can be paid to push it down a couple of pages so you don't continue to scroll to look for it. Anyway, this look, like I said, there's a lot to this, but just wanted to give you all an outline and a flavor as to what we're really talking about. Going on to the next part, which is kind of what we referred to before, there's policy documents that need to be done. So just the AML program is the one that you need to get figured out and signed off by senior management before 1 July. Like I said, it doesn't necessarily have to have figured out everything yet, but it is saying that from an Austrac point of view is at least have set out is this is what we've considered, this is what we're going to do. Now that's a living document. It will develop, it will work over time. But if you kind of get to 1 July and you don't have one, well, I'm not saying somebody's going to come and knock on your door, but later on it may become a problem for you. That's all I would say. Strengthen your customer due diligence. So if you are doing designated services, you need to look at your policies, procedures, and particularly your procedures for identifying clients and beneficial owners. Now, look, I want to be perfectly honest here, is that's a really difficult one. As you can imagine, for someone, so again, I'm being entirely transparent. I'm working in Hong Kong and China and with international entities. There's a real reluctance, particularly with trust entities, for people to really open their shirts, as they say. But you have to ask the questions and you have to make reasonable inquiries. So, for example, there is some organizations that will give to the client a document which says they sign to say that they've given you all the information about beneficial ownership. That's the worst case scenario, but if you can't get the information, if they give you a document, they sign it, verify it, it's from senior management, then you can rely upon it. It's not the best outcome and it's not the objective of AML, but I'm just telling you practically, beneficial ownerships are very difficult issue to navigate. And people, particularly in trusts, are really reluctant to tell you the details. And particularly different cultures. Let's be clear, people coming from different cultures, they're even more reluctant to do so. So not brushing over that for anybody on the call. It's a difficult one. Update your procedures. As said, unusual activity, cash deposits. One thing, again, I'll just sidetrack on, which again has been mentioned by Austrac in the seminars I've been attending, but it's something I also know well from doing my work with banks in Hong Kong. There is a concept of what's called a mule account. And what that means is somebody sets up a bank account in the name of Joe Bloggs, and Joe Bloggs, but that account then gets used by a nefarious person and they get paid money to use that bank account for AML to avoid money laundering disclosure. It's becoming, and I mentioned that specifically because Austrac has also specifically mentioned that this is becoming an issue. So you're not a policeman, I'm not suggesting you are, but if you get an indication that there's a bank account which is funneling money from other people through in that person's name, that is a trigger. If you don't know anything about it, then you don't know anything about it. But just to be clear, but they are flagging that they're expecting lawyers and accountants to keep an eye on these, what they call a mule. So it's a mule. That's what MULE, just to be clear, mule account. So basically, it's like a donkey. They're using somebody as a donkey to move cash. That's really what we're talking about. Anyway, sorry, I've gone off on a tangent there, but I thought it was a good example of what we're talking about. Must update your policies for 3 years. So look, there's a 3-year. Once you do this now, you've got a breathing period for 3 years on your policies. You won't have to do a review. I would say that as time develops, you may want to review them, but technically speaking, you don't have to for the 3 years. So let's just to be clear about it. Okay. And so look, we'll go now on one of the last issues of before 1 July. We as Smart AML are doing, and we said we have a lot of AML people that we work with, and what we're looking to is for small accounting firms or even medium-sized accounting firms that if you want to outsource the compliance function, we're offering a what's called a fractional compliance officer. So what that means is they're not a full-time employee. They're not somebody that's should be costing you a huge amount of expense, but you have a compliance officer has very much expertise in this area and somebody who is essentially your advisor on AML compliance. That's what it is. And so, when something pops up, that AML CO is there to help you. That's the model. That's what we're talking about. And look, it's being discussed openly in these AML seminars. There is not a lot of experienced AML people out there for you to hire as an employee. Now, they are out there as looking to do part-time work and do variety of work, but there's not the ones who are looking for full-time work are already employed, to be perfectly honest with you. And that's what we're talking about. So sorry, Pete, you want to say something?
Oh, no, look, I think that Dave's hit the nail on the head. The average cost of a CO now, AML CO, has just skyrocketed. Okay. And it's gone from, it's a bit like the price of fuel nowadays. I hate to say that. So I think it was 150, now it's 250 for an experienced AML officer. And that's just beyond the reach of any small business. And as Dave said, you don't even need a full-time employee with regard to AML CO in most small firms. It's just about putting the processes in place so that the CO is actually just activated by the red flags, if I can call it that. Okay, so it's having the processes in place so that the CO gets it, informs you of what you can and should do next, all right, and giving you policy assistance. I think I said to Dave once, I'd hate to be the CO who is put into something in which the policy and the risk assessment has already been done and is thrust upon them, because it's actually that knowledge that most small accounting firms will need. But I think Jeevan will talk about the platform that's going to be developed. So that's really important. I think personally, have someone who will be your fractional CO beforehand, because it's about gaining that knowledge, as Dave and I say, so that after 12 to 18 months, you won't really need a fractional CO. You'll have all the knowledge yourself and potentially turn that knowledge into an income stream of being a fractional CO for someone else. Okay. That may not be what you want to do. That's fine. We're just saying, don't think of it as just as a cost center. It's a real opportunity for you guys to be turning it into a profit center as well, to gain this knowledge and move forward with that. Thanks, Dave.
Yeah, no, thanks, Pete. Exactly. Yeah, I don't think I can say much more about it because that's really covered it. But yeah, there are ways that you can uh, deal with this that don't necessarily have to be adverse to your bottom line from a long-term point of view. This is the way yeah.
There's a question there that might be relevant, just popped up, is what's the kind of general process to resign or appoint a CO, whether that's internally or externally? Yeah.
I'll tell you this, the number of days that you're allowed to operate designated services without a compliance officer is 10 days. So from now on, no one will be allowed to take holidays of more than 9 days at any accounting practice. And it's a really good question, Jeff, because just imagine if someone resigned, even if they gave you 2 weeks notice, you won't be able to get a replacement CO within that 2 or 4 weeks. That's where the fractional CO role, sometimes for some businesses, it might simply be, oh, can you cover us for 2 months whilst we get a replacement? That sort of thing. So thanks for raising that. We just want to be flexible and people know that they've got someone to help them with that process.
Yep. And I think if you are not, I think also Austrac had some guidance around obviously a higher level of due diligence that you need to do on a CO internally versus someone who's just a frontline worker. And that might be things such as credit checks and the likes that you may not normally do now in your current practices as well.
Yeah, so I'll give it as a rough guide, the AML CO requirements. There's no specific membership, no specific qualifications needed. Bankruptcy, disciplinary proceedings, etc., are some of the factors that need to be considered as to whether you're a fit and proper person to be an AML CO. So yes, and I think that vetting of both and can I say this, other employees. Okay, you don't want to find out that the person who's in your doing all your banking is also the girlfriend of a drug dealer. So vetting your employees before the 1st of July is also a good idea. Okay, that's more of a risk assessment rather than a compliance issue, but it's an obvious one. That's why we mentioned the employment arrangements and agreements need to be updated as well.
Yeah, absolutely. Very good point. And just to be pretty specific on that too is it doesn't happen very often, and in fact, it's very much on the fringes. But I am aware of cases where somebody who's taken on the compliance AML compliance role and is doing client engagements at the same time, and because the client was an old friend or whatever, that has created issues down the track. And you'd be surprised. You might think, oh, that's unlikely, but actually, it really and I'll be frank, is like they probably wouldn't like me saying this, but I've seen it in big accounting firms, as a matter of fact.
Yeah.
That relationship and the inability to have that division is something you cannot ignore, because in a bad scenario, it will come back on you very, very badly. So anyway, just flagging that because you just made me think of it when we were talking about it. But yeah. All right. Well, look, yeah, as we said, you need to enroll with Austrac, but kind of what you wanted to quickly, and we won't spend much time on this because we've got a couple of things, but we're getting near the end of time too. You got 3 days after you formed a suspicious matter to report it to Austrac. So you're not given a lot of time to bounce it around. If you get suspicious, you've got 3 days to really work through that, which means you kind of need dedicated resources to work that through. The client's not who they claim to be. You've got a false ID. There's information that might look like tax evasion, etc., etc. So, but only 3 days. That's the reporting deadline on that, and transaction reports 10 days for an international transfer of money if it's a designated service. Tipping off. Well, I don't know if you want to say anything about that one, Pete. I haven't delved too far down the tipping off yet, but
Yeah.
it's pretty self-evident, I guess.
It is, but I think that the question that's been raised, I did a seminar on this yesterday to lawyers, is what do you do if your client drops 100 grand into a deal and they're a first year university student and you've got to do the tipping off, okay? Now, the question that lawyers had and accountants might share is, oh, should I stop acting for the client? Well, my tip is don't. Well, sorry, that's tipping off. No. My suggestion is don't stop acting, because by doing that, you're actually giving rise to a circumstance where what you've done may tip off your client that you've reported them to AUSTRAC for a suspicious transaction. So again, focusing on what your role is to supply data, is to collect data, and on a couple of unique situations like suspicious matters and transactions, to report that to AUSTRAC. Okay? And if you start terminating, then that's going to be, I suspect, a really good indicator to your client that you've reported them to AUSTRAC, and then you're going to be in breach of the Act by having done so. So unless you can think of something unique like, oh, look, my mother's just died and I've got to leave the office for a few days and I can't do the work anymore, be creative perhaps, I don't know. But again, you're not there as the policeman, you're only just reporting the data. Don't be eager to do something that would then make it a tipping off offence. Okay. Thanks, Dave.
Yeah, no, thanks, Pete. That's good. So yeah, just I'll move on to the next slide, which is about transitional relief. So look, if you have an existing client, you've done the risk assessment of the client, and they either do not fall within the designated services definition, or they're just continuing and they're continuing to do the same work with you. That would seem to be an exception under the current arrangements. But if there's a change in scope, and change of scope being one of the triggers you need in your AML processes, then there won't be an exception for existing customers. Just to be clear, the objective from AUSTRAC is to try and again, pull back from making you do a complete due diligence of every client. They're trying to give you a bit of space. I mean, it's a double-edged sword, to be perfectly frank with you, because then you're going to have systems where you're doing due diligence on certain clients, new clients, and ones that have changed scope, but you're not doing due diligence on the others. So your mechanisms internally of how you manage that can be problematic, to be perfectly honest. So yeah, I know that they think they were doing everybody a favor, but I have to say, as an AML professional, I'm not sure they necessarily did, because it might have been better to have taken the big bite of the apple at once, rather than trying to do little nibbles. But it is what it is. But that's just my personal view, of course. Urgent matters, yeah. So this is one that people ask about a lot. You need to at least start the process on doing due diligence, but it doesn't mean you're prevented from acting for the client, but you cannot complete the transaction or whatever it is you're being engaged to do. You have to complete the AML before you can do that. And you either that AML comes out, it's all fine, or you triggers, and then you have other issues and potential leading to you can't complete the work and have to cease working, etc. I mean, there's various decision trees and scenarios there, but just flagging that as well. Yeah, trust money, very important one. That's the one that, again, AUSTRAC seems to, and would tell everybody openly, AUSTRAC is, whether you're a lawyer or accountant, that's probably be the first ones they're going to go and put a microscope over. I'm not saying that's going to happen in the near future, by the way, but I am saying that it will happen. So, and let me be also clear, is from experience, that 1 July deadline is important, because you'll have breathing space for whatever's happened up until that point. If in 1 July, if you're not making some serious attempts to have controls around that and AML processes, you will come for criticism. And if you've gone, let's say 6 months a year, and you haven't really dealt with trust money in an AML standard, and then 2 years down the track something happens, they will go back to that whole period and look at everything, and everything will be on the table, to be perfectly honest. So not looking to scare, but I'm just saying I do know that's how it works.
And David, something I might interject with is I saw there's a few questions pop up about obtaining bank statements where accountants may not normally collect those for that service. An example might be individual tax returns. They don't normally ask for bank statements. So a lot of the guidance from Austrac was for example, accountants aren't expected to be detectives or investigators like you mentioned before. It's really if they're coming across this in their ordinary course of business. They're not expected to ask for, documents that they don't normally ask for to go through a full investigation, in terms of doing their day-to-day work. I don't know if you want to
Yeah.
expand or talk about that, a little bit more as well.
Well, yeah. Well, look. I mean, there's a dichotomy, for whatever better way to describe it. So the problem is that the position the small businesses are unfortunately in, particularly as accountants and lawyers, and company service providers, is small businesses are a target for these guys because, and I'll tell you the utmost truth, and believe me, the big organizations get it wrong, but they have an enormous amount of resources to throw at this stuff, which gives them the ability to pick up on a lot more than you as a small business can do. And so, Peter and I are a small business too, and we've thought about this quite a lot. Is that as a small business, there's a lot to juggle, you've got a lot to deal with, but so there's that problem, which is um, money launderers and criminals. Frankly, they look for smaller businesses to do this stuff with because they think they've got more chance of getting away with it. That's just the reality. That's a criminal mindset. That is what it is. I'm not making any judgment. I'm just telling you that is what it is. The other side of that is that you are a small business. You're not a police officer. You're not a detective. So you're not being expected to, spend weeks and weeks investigating. The expectation is reasonable inquiries. That is the term. So what it means is, have you made what attempts you could have using various sources to get data, to get information. If you've done that, then and you've got it on a file, then you've got protection if something happens down the track. Is like, I made reasonable inquiries. Here's my file. This is all I could do. That's the way I would put it to you, if that makes sense.
Perfect.
All right. So yeah, just geez, we're running. Oh, bloody hell! Sorry, I didn't realize what time was. So yeah, sorry. AML is not going to make the sky fall. We see it as, and we want to work with small businesses to help you create an income. We do see it. We have a clear view of it. We want to identify what parts of your businesses assisting in designated services. You may be able to do that yourself. Again, we'll help if you can, but if you can do it yourself, then great. You don't necessarily need us. You do need us, we think, to do your risk assessment. And you need to, on your clients, start preparing for 1 July. Start gathering your information about your clients. Don't, the worst thing you could do as a business and business operator is to leave it all, that getting information about your clients to the last minute, because it'll just put you on a heap of pressure, which you don't really need. Sort of as you're going along, you're talking to the client, touching base, get bits of information as you go along and say, I've got to do AML. Can you send me this when you get a chance? Blah, blah, blah. You don't need to, I mean, you can, if you like, just sort of say, here's a big list, give me all of this now. There's a client management element to this, and I'm saying that you do have a little bit of breathing space, so you can manage that. But if you try and leave it to the last minute and you bombard your clients, they're not going to be happy to be, that's just clients, you know what they're like. So yeah, if unless you're selling ice cream, Yeah, get your risk assessment, your documents, procedures, and your CO in place. And then I guess the last one is just wrap up. There's myself and Pete, me talking too much, as I seem to have done today. Um, and look, our website, look, we are a small business, so we've had a few teething problems. It will come up in the next couple of weeks, but that's our website. And we tried to do everything at once, but now we've just started. We're going to just now concentrate on getting what we need to get up now, like the risk assessment tool, etc. So keep your eye out for that. So I guess that's about it. Peter, you got anything to add?
Oh no, look, I think you've done great, Dave. I mean, there's other things that we will be doing or which we've been involved in. Probably a little bit outside the scope of this group, but just for your clients, okay? Your clients, this is where I say you can add real value to your clients by maybe looking at whether they are doing designated services. They won't even realize it. I say that honestly. And that's part of the process that Dave and I are looking at how to help you build value to your business. And you can even, in some cases, obtain exemptions from the AML Act. But happy to have a chat offline with anyone about that, how that can be done as well. So that was great, Dave. Thanks so much, Jeevan.
Question there, will you be able to assist with the initial setup of all the policies and risk assessments and the review of those, and then leave the actual ongoing to the accounting firm?
Would love to do it that way. Would love
Yep.
to do it that way. And Dave and I have spoken about the costing model to be one in which the costs are, spread out over a lengthy time, so that it becomes so it doesn't become insurmountable. And we think that the BGL product, we know perhaps a little bit more, but we can't say too much, will be an excellent conduit for that. Because Dave and I have seen some of the platforms out there, and they're pretty well second rate, if I can be that frank. And we only want to partner with a platform where we know what's going into it. Okay, it's a bit like not knowing what's in the sausage. Some people don't want to know what's in the sausage. Well, we prefer to know, and we think this platform is going to be an excellent tool to help all small practices. So that's the answer. Yep, but we think BGL will be the best.
And a few people have mentioned questions there. I think, David, you mentioned that the website's got some issues at the moment. So feel free to, I guess, I guess, David or Peter there directly until that's up and running properly.
Absolutely.
Yeah.
Cool. So as we mentioned, we're building a product, I think, a few times. So that's my placement slide. So here you go. You can have a sneak peek view. So the product itself, we're not going through an in-depth product view today, but as we've kind of touched on, the actual product itself will go through the full policy, risk assessments, procedures, who the actual compliance officer has been reviewed, everything from that CTF program point of view, and even the likes of you've done all the work, you want a partner like David or Peter to, so it's David and Peter to come in and review it. There's the options like that sort of in there as well. Then in terms of the ongoing CDD, this will link with all of our existing products. It will link with Xero, link with other tools as well. It'll have all your list of clients in there, and you'll have the ability to do all your CDD checks, store all your evidence, even if that client is not being onboarded and getting that through. Through. So this is currently being built and almost ready at the moment. So I know there's that question of when. Question we've had a lot, and I'm happy to disclose this as of today, is what's the pricing for this new software? We'll be charging on a per client or per entity basis for the actual base software. So you'll see that roll out there. Where you are doing KYC checks, this is something we have in place now. So you've got obviously the verification of who they are part. You've got the a report that we give you, which is covers off the PEP parts in terms of the AML databases. It does sanction searches as well and gives those reports. I think as David mentioned, even with this, the actual sanction, I suppose, so the next part, the adverse news checks and things as well. Even though you're getting a report that's automated, you still have to review the report because that report can be, for example, 25 pages in some cases. If you've got to know a name like John Smith, you're going to get a lot of hits compared to maybe a name like Jeevan Toki, for example. Biometric scan is an option again, even for verification. So there's an option there, and we will have some advanced KYB offerings as well, where you're not doing manual checks and you want automated solutions. So there's some things being built out. So webinar 4 in our series will cover this in a lot more detail. So if you're going to cover there, if you can't wait till then and you want to reach out beforehand, the email that we sent out, just reply to that, and either myself or one of the team will get in touch. And we're happy to discuss how that would work for your practice in more details in terms of the software piece. Working through, because we know there's a lot to unpack there as we work our way through. So again, yeah, if you want to talk on an individual firm basis rather than wait for the webinar, please reach out to us. We'll, either through your account manager or reply to the email we send post webinar, and we're happy to go through there. David's touched on a few of the resources on AUSTRAC that is included there in the slides. Some of them there. So in terms of the starter kit and a few things, so you've got them there as we work through. And if you missed the start of the session today, today's session is being recorded. You will be sent a link of the recording. You will be sent a copy of the slides. So again, just covering those common questions out there. I'm not sure how much time we got, so maybe we'll just leave 5 minutes for questions, because I think we've sort of gone run over there. But I suppose common questions there, I might probably just tell you there. And what I might do while we do that is sort of go back, maybe to your guys' emails there. So everyone's got that there. So I saw there's a question, I guess, pop up there. But I guess there's probably a lot of, maybe I'll open the question with a weird one there. Obviously, if it's straightforward, it's straightforward, but there's a lot of gray areas, coming up. So it's a, very open question. But what should be the, it's an open question, but maybe a common one might be, an accounting firm is engaged with a client, and then the accounting firm engages with a third party. Or I've seen another one that popped up before. There's a client deal going on where there's a lawyer, accountant, financial planner, and maybe a mortgage broker on the other party was. Do all of them have to do KYC? Can they rely on each other? Can they share?
Mm-hmm.
And there's a lot of gray area there. So I don't.
Yeah.
It's like how do accounting firms approach these scenarios without you giving the answer? Maybe yours.
Well, Pete, I can go, but you want to go?
No, you go, Dave. No,
Okay.
you've got this.
So let me answer that fairly frankly. So the interesting thing is that I have raised this with AUSTRAC. In other jurisdictions, they actually have put in the law provisions to allow you to do that. So, for example, I told you I drafted the AML rules for accountants in Hong Kong. We were allowed to put in provisions in those rules to rely upon a lawyer's client due diligence. For some reason, they haven't done that here, but they have said if the lawyer or accountant, whoever it is you're working with, is willing to share their client due diligence with you, you can rely upon it, but you still have to do your own assessment. So what that means, a bit like what Jivan was just talking about, you need to read it. So,
Yeah.
and because that's the assessment from their point of view, you still have to do an assessment from your point of view. So you could get the client data and information. That's extremely helpful, and it minimizes, but you still have to look at it, so to speak.
Yeah. I think just to take on that, Dave, is that's where the client retainer agreements are important and your privacy policies, because you're having to share the client's data with somebody else, perhaps, or vice versa. And if you don't have that written permission, then it's going to be very clunky if you want to do that sharing.
Yep. All right.
And I think, Dave, can you just clarify, real estate agents got out of having to get the details of buyers. They only need to get seller details.
Yeah, indeed. Yeah, they just literally just the other day announced that. I mean, I'll be honest, I haven't read it in detail, but they just announced a new law that's minimizing real estate agents that, if they're doing a sale, that they got minimal obligations with buyers. It's pretty surprising, to be perfectly honest, but I'll leave it at that. I don't want to.
Well, I'll share something that came up yesterday with lawyers. So keep in mind, if you're doing designated services and you don't have the AML, VOI, etc., then you have to stop doing the designated service. So what happens if you're in the middle of a large transaction and someone who needs to give you, don't forget, it's your obligation, you're the reporting entity, and someone's not giving you the AML data, Does that mean you have to stop acting for your own client, even though they're not the one who's putting the fly in the ointment, if you call it that way? So this is about your terms of retainer being quite clear about your obligations might mean that you can't act anymore.
Yeah.
Okay. And we were talking about even the contracts vis-a-vis between your client and others might have to have similar clauses to make sure that a transaction can't simply stop because someone's not giving AML material. I'll just share that with you as soon as a practical issue yesterday anyway.
Yeah. Yeah. Totally agree.
And there's been lots of questions, I suppose, sent through today. So a lot of those questions, we will share the Q&A from today for the ones that we can and we bring it through. So we'll go through. There was a question there. It was a BGL question. Why don't you have KYC with adverse and biometrics? That is coming soon. So that is something that has been requested recently. Another option that it. So yeah, I haven't got the exact time frame there, but that is coming soon there. And I think I think what will take place eventually is there'll be a lot more, I suppose, education and things around that. So even around software,
Mm.
there'll be a lot more education, courses built in. There'll be things that will be available that goes out. We are looking at how we can automate some things around transaction monitoring and things in the future. And I suppose, yeah, that we're going out and I suppose looking at those various things as well. I think in terms of time, I think we've sort of gone well over time, so I might um, you know bring that to end. But I suppose yeah, if anyone does have any questions, I guess post today. You do have all of our details for today. But David and Peter, thank you very much for your time today. I'm sure this might be the first of many webinars, I would say.
I was going to say, and if anybody has specific things they'd like us to do a seminar about in the future, please let Jeevan and us know, and we're happy to look into arranging that. No problem at all. We're happy to talk. This is a subject that we have got heavily involved in. And thanks, Jeevan. Sorry for putting you in the position of doing the slides for me. I'm sorry about that, but thank you.
We got there with the combined formatting in the end. So.
Yes.
So, Peter, thank you for your time as well. And thank you to everyone for attending today. Any feedback, we'd love to hear, as David mentioned. And yeah, we hope you enjoy the rest of the day.